I always thought that seller financing was only beneficial for the buyer. They don't have to go to a bank, they save on closing costs, no credit check. It is super beneficial for the seller to sell you a property using seller financing. This might be their best option. And there could be tons of reasons why it's their best option. It's the seller's best interest to do this because of two things: taxes and inflation. And these are the two main killers of wealth. Welcome back, everyone, to the Learn Like a CPA show. I'm your host, Ryan Bakey, and today we're going to talk about why a seller should sell using seller financing. Or if you want to spin it off, you could also say how to get a seller to sell you a house for cheap, super cheap. And you have to look at it from the seller's perspective, because I always thought that seller financing was only beneficial for the buyer. It's like, oh, this buyer can buy a property with not as much money down. They don't have to go to a bank. They save on closing costs. They can protect their debt to income, no credit check, blah, blah, blah. But it actually is super beneficial for the seller to sell you a property using seller financing. And we're going to talk about that today. So this kind of goes back to some of the previous episodes of what we talked about. And how do you convince a seller to sell you a property using seller financing? Well, a lot of sellers are not going to know what seller financing is, and their agent or their realtor may also not know what it is. So you really need to have a conversation with them and talk to them and explain to them why this might be their best option. And there could be tons of reasons why it's their best option using seller financing, and that's what we're going to talk about in a future episode of negotiation tactics. But with seller financing, it's the seller's best interest to do this because of two things. And these are the two main killers of wealth, kind of going back to the other episodes, of taxes and inflation. Because if I'm a seller, let's say I have a property that I bought for $100,000 and now that property is worth $500,000. Well, if I sell that property, I'm going to have a gain of $400,000. And if I'm paying 20% capital gains, let's say I'm paying net investment income tax and then state taxes, I might have a 30% tax bill due on that. So that $400,000 that I'm getting at the closing table, let's say the house is fully paid off, like I'm going to have to shell out over $100,000 just to pay taxes, because I have a $400,000 gain and it's 30% interest rate or 30% tax rate. So I'm paying $120,000 in taxes. And so when I get that cash, boom, it's getting taxed. But then what is happening? It is sitting in a bank account and losing money to inflation. So you need to convince the seller, and you need to tell the seller, like, look, you're not only are you going to get taxed on the money, but it's also going to lose value to inflation. And when you understand those concepts and how to relate that to a seller, it gets this into perspective. Well, okay, if I'm going to take these proceeds, what else am I going to do with the money? And that is also what is hanging up people to do seller financing, because right now, if you were to walk away with that money from selling the property, what are you going to do with it? Like you can earn 3-4% in a CD. You can invest that into more real estate at a higher debt service. You could take that money and put it in the stock market. But a lot of times, the best option you can is...
Real quick, guys, if you could think about how you found this podcast, maybe it was on Facebook, Instagram, maybe somebody shared it with you. I don't run ads for the show or have sponsorships, so the only way this grows is through word of mouth. If this was valuable for you in any way, the only ask that I can make is that you share it with somebody else. Pass it on to the next person whose investing journey or business can be changed by listening to the show. Much love, guys, and let's get into the episode.
But a lot of times, the best option you can is the note that you have on that property, is a new note that you're going to have between the seller and the buyer. Because if I'm going to go take that money, and like I already said, if I hold on to the cash, I'm going to have to pay taxes and it's going to lose value to inflation. But instead, if I sell or finance a property, not only am I able to defer the overall tax liability over a period of years, which is actually by the amount of years that the seller finance note is. So if I have a $400,000 gain and let's say it's 30% tax, so I'm going to pay $120,000 in taxes in year one, or it gets stretched out over the course of the seller finance note. So I'm able to spread that, let's say it's a 10-year seller finance note, which is what they're typically at. I'm going to be able to spread that $400,000 gain over a period of 10 years. So I'm paying, let's say, $40,000 a year in capital gains each year for 10 years. And not only am I delaying that tax bill, so instead of paying $120 in year one, I'm paying it over the 10 years, but my tax bracket hopefully isn't as high as it if I took all the income and gains in that first year. And so I'm able to spread that gain out over 10 years, but then I'm also able to just pay less overall because of what? Because of inflation. Because by the time I come and pay that money in year 10, that the value of that money is worth less. So the government's getting less because I seller finance that property. And so taxes and inflation, you have to convince the seller that their best option is to seller finance the property to you. And you want to convince them that you have a vision for the property, that you can see it going here and there. And why is that important is because the seller's recourse is in a seller finance transaction. Typically, if you default on the payments in most states, like if you're 2 or 3 months behind on the payments, the seller can actually take the property back. So that is the seller's recourse to seller financing it to you, is because the worst case scenario is if they don't get paid, like they just claim the property back. And that gives them like peace of mind of knowing that this transaction can work for them. So 3 main pillars there: taxes overall. And this kind of depends on who you're talking to. And for what it's worth, I've just noticed that a lot of older people do not want to pay taxes at all. Like just the term taxes just scares them. It doesn't even matter if they're in a 10, 20, 30% bracket. Sometimes they don't even understand that. But if you convince them, it's like, hey, like you don't want to sell this right now because you're going to pay a lot of money in taxes. Okay, they understand that and they're scared. And they'll most likely hear what you have to say next. Everybody kind of understands the taxes part. But when you look into that inflation part, the inflation eroding at the money that they're receiving, that's how you kind of put 2 and 2 together and you say, your best option is to loan me this money, actually, is to give me a loan on the house. So that way I can control the asset now. But if for whatever reason I didn't pay, you're going to take the house back. And what I would say too is a lot of people that are looking to seller finance either.
Hey, real quick, guys, wanted to interrupt the podcast episode today to make sure that you check out some of the free tools that I have online. So these are going to be tools that are going to help you analyze deals to see if they're good investments. They're going to help you track your rental property investments, and they're going to be tax training tips. So you're going to get access to all my pro formas, all my tax trainings, all my strategy completely for free. So make sure you download it. It's going to be linked in the podcast here below. And now back to the show.
A lot of people that are looking to seller finance either a rental property, a house, or a business, a lot of them, like we said before, own it outright and there's a large gain. But that gain or that whatever they walk away from, it may not be enough for them to retire. And so this is the last transaction we did, one of the RV parks. Like the buyers, they own this RV park free and clear, and they had 0 basis in it, which means like if they were to sell it, they pay gains on the whole thing. Well, they sold it to us for $2.5 million on a seller finance deal, part bank loan, etc. But that $2.5 million, they would have had to have sent 30% of that to the government right away. So they would have sent over a $500,000 check to the government, and then they're left with $2 million. So they got to pay some closing costs. But that $2 million for a early 50s couple, it may not be enough for them to live for the rest of their life. So they have to invest that money somehow, right? If I have $2 million, I get $2.5 million, bam, I got to pay taxes on it. Now I'm left with $2 million. And what do you know? It's getting eaten away by inflation every year, just sitting in the bank account. And so their best option is to seller finance it to us, because what is their alternative course for that money? They can put it in a CD. It's going to earn 3 or 4%. Yeah, they can go enter the real estate market, but with high debt service right now and just a lot of deals not penciling out, probably not the best case of their money. So convince that seller that here's all the reasons why you should seller finance it to us. You want to sell them on the vision for the property. You want to sell them on they get to save money on taxes. You want to sell them on the idea that if they just leave it sitting in a bank account, it's going to get eaten away by inflation. And you want to sell them on what is their alternative course of action, because if they just leave it there, it's not going to earn and it's not going to grow. They're better off seller financing to you, delaying that tax burden, making some money on that cash that otherwise would have been sitting in the bank account. And so in one of the future episodes, we're going to actually break down how to do seller financing as a buyer. Like, where do you look for these type of deals? How do you know somebody's owned a property and is probably fully paid off? We're going to talk about the platforms that you can use to do these deals? How do you present your offer to a seller? That's all coming in one of the next episodes. And if you got value out of this podcast, make sure to check me over on my Facebook group. We have a Facebook group called Tax Strategies for Real Estate Investors. There's over 8,200 real estate investors in there posting, engaging daily. Go in there, say hi, drop me a message, and I will personally respond back. And thanks for listening to today. We will see you in the next episode.